Welcome everyone, this is Scramble from Emotional Crypto Trading. Here we go today speaking about Ethereum. We're going to do a technical analysis talking about the most important numbers and the probabilities based on the technical analysis that we have did. Right, so the intention is to share with you what are the probabilities for the upcoming movements as well as support and resistance areas that you must consider for the upcoming trading activity. Right, so Ethereum is right now the second cryptocurrency out there based on the market cap, but the first one between the altcoins. It has a $17.3 billion market cap with a $6 billion every single day volume, which is anywhere slightly above 30% volume per day out of the entire market cap, which sounds insane to me, but that's the way it is. It's totally insane to have a 24 hours volume that's the value of more than 30% than your market cap, or compared to your market cap. And that tells me another thing. Compared to Ripple, for example, which is advancing pretty nicely during the implementation, integration, and adoption of the token, we have the ability to see a lot of the posts online and marketing done by the Ripple team very aggressively these days, even though their volume can't really be compared to Ethereum's one. It seems to be one of the most favorite cryptocurrencies out there amongst top 5, and of course I would say this thing is not gonna fail by the way it's set up as of right now. So if you're thinking about long term, Ethereum has the ability to prove numbers way above $1,500 per token, exactly like we were at all-time high position at 1,400 today, when we have 6.5 billion volume at a $164 price. Think about that. This thing could be easily $3,000, $4,000, $5,000 per token, exactly what it is today on Bitcoin's price. Now, the only thing that stands between the numbers I'm telling you to see them in your account is the time. That is my opinion, that the time is the only thing that stands between this thing, right? So once the time is going to reach there, we're going to be there. It's just about to be enough patient and trade these tokens until you are going to be satisfied with your earnings, and then of course secure a part of your money. However, the main idea behind the cryptocurrency is long-term and to multiply the amount of tokens you're having. That's why downtrends are great as well, because you can multiply by shorting the market. Uptrend is awesome as well. You can make great money. But it's necessary to have downtrends as well, because you can multiply at that time your quantity of tokens. Great, so that being said, let's just go towards over the technical analysis on the Ethereum side. We have used for today 30-minute candlestick, which speaks about a short-term, 4-hour candlesticks, which speaks about swing trading and long-term details, and of course the 1-day candlestick, which is totally long-term discussion. Then we've got some of the news to represent you, the most important news of the market. But first we're going to start with the 30-minute candlestick, and this is the situation of Ethereum. This is the point where we have spiked. It was around 2nd April, and we did skyrocketed pretty aggressively, just like that. Let me just share with you. You know, this is 24% in 23 hours. That's awesome. And of course, that is a regular number when the market spikes for the altcoins. They used to go anywhere between 15 and 25% average when the market spikes, and that means Bitcoin at least 10%, alt 20, 25, 18, 17, right? So you can see that some of the alts have the ability to increase the double speed that one BTC does, which is great to know for you in order to make larger profits. Now we had this 23% movement very fast in about 23 hours, and then we did found the top here, a peak, little correction came in, setting up a support point which kept supporting from there, even though the resistance appeared very fast afterwards, but it kept supporting, and we were setting up right here, which could come out as a pattern of a double top with the first one. but totally we have pointed out here at $180 resistance zone, which is playing out to be like this, and it still continues. Now this is the top of the peak, and usually we only have a single top, but at this time Ethereum sets two tops, which is double top peak, as a pattern. Now what happens afterwards is actually the full sort of a way pullback, right? The full pullback, or the major pullback after the increase, because the increase was looking something like this in a nutshell from here till the top, and then the pullback plays out just like this. All right, so the pullback which plays out simply just like that. Let's kind of measure the pullback. The pullback was about 18% in an hour and 30 minutes attention, which is insane. And this also speaks about the volatility and risk ratio when you trade the altcoins. In my opinion, it's extremely difficult to trade altcoins with margin trading, because you might have movements like this, and even with low margin, you can get your ass wiped out for sure. 18% movement in the market in an hour and 30 minutes. If you do not use stop losses, you can get very easily liquidated. And by the way, if you trade in the wrong direction, then your stop losses are going to be triggered pretty often. 1 hour and 30 minutes, 80%, but totally we were actually fighting back a little bit, and we were closing at the range of 12%. Now 12% from the bottom till the top is actually sitting at approximately 50% from the increase. That's how the pullback was bottoming out, at 50% from the starting point till the ending point of the bull run. Pullback represented 50% bottoming out, which is still great, which still represents to be ending up as a bullish pattern, because even a bull run like this could end up as a bearish pattern as long as the pullback is more than 60%, right? So if the pullback would have continued down just like this, then we would have a reversed V ladder playing out, which is a bearish pattern out there. Great. So then we have fixed a uptrending channel support line, which confirmed extremely nicely, like it would be handcrafted, just like that. Look at it. Positions which can be used, and right now we're facing here among with the triangle horizontal resistance line, because what we have here from the green line, which is the uptrend, with the blue resistance zone. This is not a line. I've missed here, I wrote line, but this is actually a zone. We are forming a triangle. Now, some people would say that this is a bullish ascending triangle. I will show you what is a bullish ascending triangle, and I'll tell you why this is not called a bullish ascending triangle pattern. This is something different. A bullish ascending triangle is having an initial rally which enters into the triangle, then have movements within the triangle, and has the ability to spike afterwards. Of course, what we have here is the upper side of the triangle, which is representing the pause in this case scenario, and we just call it the horizontal resistance line of the triangle, which can be found here, right? So this one is also represented within the pattern. Then the lower side, the uptrending channel of the the support line of the triangle, is also represented here, like in our case scenario. But the only thing that is different is that we're coming within the channel from the top, from here. So that's the place we're entering actually within this channel, which is not giving the permission to be called a bullish triangle, or not giving the permission to be considered if you want to trade this as bullish triangle pattern. It could be something else. It could be as bullish as the bullish triangle. It could be as bearish as any other pattern. It doesn't matter. That's not the discussion here. What matters is that this is no longer a bullish triangle pattern, because it matters from where do you entry within the pattern. It's not the same you entry from the bottom or from the top. It's totally different. Great, so this is the situation right now. As soon as we break out of the horizontal resistance line, which is top of the triangle, simple, we're gonna have to fight with the 180 once again. In order to break out of this, which also had a double resistance, we need a bunch of volume going on. So we just have to wait and expect that movement in order to see some more and higher numbers. Right? On the other side, if we break below the uptrending channel support line, below the green line right here at some point, there's no big issue because we have a lot of the support horizontal lines that we could use as finding some balance, as finding some comeback. Great. So this is short-term details, 30-minute candlestick. We're going towards the 4-hour candlesticks, and we're going to speak about the major uptrending channel resistance line, which we just had a fight with, which has a few confirmations very, very nicely. Look at that. And of course, in the bottom side, we have a major uptrending channel support line. Here we have a false breakout representing the W pattern, just like this. Or I'm just going to make it here on the left side, just like this. This is how the W pattern looks, and the one which is bullish, because the right side, the right wing of the pattern is way longer than the left wing, which is very important. So this case scenario right here in the bottom, that's exactly what we have. The right wing way longer than the left wing. Actually, the left one tries to break below the support line, and of course bulls are fighting back. They're setting up a resistance shadow over there and then setting up for the W explosion. Very nice. It has some other confirmations which are not extremely close to the line but still reflecting to that, and of course the breakout which is appearing at this point, and then the movement towards to the top, which is touching the resistance line of the major uptrending channel. On the other side, we do have to expect the 150 to act as a support. We did act it as support in the past time right here, very nicely. And that's basically the movement of the pullback, which acted as a support and previously acted so many times as resistance, but right now we have a different rule of the line and it's coming with us. This is the 4-hour candlestick. So what we wonder about, or what we question here, is the movement within this circle, within that yellow circle. If we're about to break out, that's the big discussion, because we have to get some support in that area. And you can see that support, which is a necessity into that yellow circle area, needs to happen above a resistance line, the trending resistance line of the major channel, right? Just like that. Now, in order for that to happen, we need to spike at least to $190, and then for some reasons the bears could take control over the market and retest our previous resistance line, currently support. However, we definitely need to get supported there. So at some point here, we need to fight back and push the market over at testing the $210 resistance point, which is appearing at the top. By the way, if we would be to measure this, there is another 20% increase in the price if we're about to touch the $210 per Ethereum resistance zone. Right, so keep these things in mind, because it's very important for you to sell at the points we're expecting resistances and then buy back within the pullback, something that a lot of the people did here during this pullback. We had the double resistance appearing, and it was a perfect time to sell off, especially here when the red candlesticks have started. The volume has increased dramatically for the bears, and that was a signal along with the other ones that we're ready to sell out. So we did sold out, and then we had the ability to buy back at the time the rejection appeared. Look at that. Rejection appears, you buy back, and of course you have here 10% more in the tokens that you have generated just by trading the shorting. Great. The last picture for today is going to be on the one-day candlestick Ethereum paired up with the US dollar for Bitfinex, as all over the charts. We've got here 5 different positions, and they are called structures. Each of the structures have a color from blue to red. Blue ones are representing bullish environment, red one bearish environment. You can see that right now, this is the meaningful part, is we're kind of touching the top of the resistance point for the bullish environment, which could drive us way higher, right? So this is the big deal. If we get to the point to touch at least from the top of the D structure resistance point and the bottom, if we get to touch the middle distance between that, which kind of plays out like this. So if we would have to measure, it's 840%, 820%. So if we have the ability to touch something like 410, 415, 413%, up to $454, this would be an activity until the middle size of the previous structure, which will look extremely healthy to me. So a probability for a lot of the people which wanted to sort of a way find a probability where the bull market could get stopped and we could have entered in another short-term bear market. This right here, $460, $500 could be a probability, considering how the D structure plays out and the middle portion between the top and the bottom, right? So we would have to consider this as a probability as well. Now, looking at the B and the C structure, that's our comparison, what we have did. A structure is the one that represents the bull run, and we just skyrocketed from, what was that? We went from $258 to $1,400, which actually represented 435%. At this time, we'll still have ability to take 435%, 420%, but of course from lower numbers up to the 500 levels. And we're talking about specific cycles which are appearing in the market. And that's true, because that's the way it's working. It's kind of based in a variety of cycles. Though the human sort of a way have the same specific behaviors during a specific time of the market. That's why these kind of cycles are repeating over and over again, because the nature of the human being, it is the same, and he or she reacts in the same way while seeing the specific parts of the cycle, which creates the next parts, and then the next part, and then the next part of the cycle, right? It's the human brain which creates this pattern. Great. This is the way it looks like. So it's important for us right now to take advantage of the current scenario and break above this thing right here. $200 is the limit. We break out of that, and then we establish a total different structure of the E structure, right? So it's going to look total differently, which is awesome because it sticks out of the previous patterns and blows out in a way that we used to call breakouts. Right, so that's the technical analysis around Ethereum. Very important for us to consider, especially for the short term guys. Right here, the important price points that you would have to use in order to trade. Now, some of the news that were announced around the internet today is the central banks looking to cryptocurrency to replace cash. Attention for the ones thinking that banks are not working with cryptocurrencies, or these two terms are enemies. Well, it's not like that at all. Banks have no reason to consider cryptocurrencies as their own enemies, and they have no reason to participate in a fight with the cryptocurrencies in order to determine a fundamental winner in this liberal economical market. There's no such a thing. So the only way they would gain sort of a way more, as financially speaking, from the banks is to utilize and implement cryptocurrencies within their activity, as long as they would increase their profits. And I'm sure it's going to do like that. That's why a lot of the projects are using Ripple, for example, because it's decreasing the cost for the transfers and the speed is increasing, right? So it's totally, in a nutshell, it's decreasing the costs of their activity, which is of course making the sense to use those tokens and blockchain. Very simple, just like that. Don't think about the banks positioning themselves against the cryptocurrency world and the blockchain stuff. No, it's actually not like that. A lot of the startups are coming from people that are participating into the banking systems. So they're getting funds and they're getting helps by the contacts and experienced people from the banking system, from the financial world. This is one thing that definitely needs to be considered, because all around the space it used to fly an idea that says that banks are totally against cryptos and they do not want to get in trouble, so they don't want to lose the control over people, and they don't want to use not even the word of cryptocurrency or Bitcoin. Well, unfortunately, it's just a theoretical story that represents nothing rational at all. If you listen to the ones participating into the banking system talking about cryptocurrencies and the real people, which are honest and they like to do honest interviews, you'll see that they're totally with cryptocurrencies, even though some of them are a little bit skeptics, because it's a pretty recent industry, and that's why, not because it's weak or without a sense. It's just because it's a pretty recent industry and they think that it needs more research and verifications and adoption and implementation. It's kind of true from that perspective, right? So we have to definitely leave on the side of theories which are telling us that we have to believe in conspiracies. That is, of course, nothing. They're mentioning here that to get a better idea of the current state of research in the specific field, the World Economic Forum prepared a March 2019 report that asked, how are central banks exploring blockchain today? And we've got Canada, England, Singapore, and France leading the race of the research process. Another thing right here speaks about a huge gift that was made to a United States university, representing $25 million in Ripple, and that's kind of awesome. We've got another thing here which talks about the implementation, adoption, and usability of the BTC amongst bankers, of course. Wall Street trades a significant portion of the market's Bitcoin futures, and we can see by that out of 685 million, we've got 563 million in volume, especially on April 4th, traded by the CME, right, the Chicago Mercantile Exchanges. We've got that are represented, which is awesome. On the other side, we've got Ripple, which partners with Rational FX, over 180,000 new customers exposed to Ripple tech. That's the way it works. This is how Ripple is taking it always and always to the next level by having such a such a development in the real world. And Ripple does it. I mean, they have a bunch of marketing campaigns going all around, and for every single such a thing, for every single news like this, they make it very, very popular all over the internet, which is a great signal of how this company is working, that there is a healthy machine behind the engine of Ripple, which is good to know. But that is not really reflecting on the space right here compared to the Ethereum, which is 6 times more of volume per 24 hours than Ripple as of today. Great. That's pretty much all about, guys, today's video presentation. Feel free to hit that subscribe button, then next to it you got the bell. Click that bell button and you're going to get a notification whenever I'm posting. Feel free to like this video presentation and share your opinion in the comments area, as well as let's build a very nice and comfortable community right here on YouTube about Ethereum, about the alts, around the BTC, talk rational things on the technical analysis side, and speak real numbers, real things, real existing details which are offered by the market. Great. Thank you so much for watching, guys. Talk to you soon.